Hi everyone. In the previous session we completed section number 17 and another small issue called as fast track corporate insolvency resolution process. So in this particular lecture we are going to cover three very important areas in this chapter IBC. One will be the committee of creditors and related aspects. So that will be divided into three different parts, which can be said as section number 21, 24 and 28. There are totally three sections to cover today. Three sections only. Maybe a question. Committee of creditors is such a big question which will take around 1.5 hours to complete. So the remaining two sections are there. Section number 24 and section number 28 will be taking each 15 to 20 minutes. So a 2.5 hour session we are going to concentrate in understanding the concepts of section number 21, connected sections 24 and 28. So let us start without a delay. So first let us start with section number 24. So first please make a notes. See here, committee of creditors and related provisions. Committee of creditors is governed by section 21. Meetings of committee of creditors governed by section number 24. Approval of committee of creditors for certain actions, section number 28. These are the three different sections that we are going to discuss in day 8 of our session. Okay, so in the 8th day of our session on IBC, I told you very much clearly already, IBC is not just a small chapter which can be completed just in 1 or 2 days. It's a total exercise of 10 to 12 days. So very important chapter for paper number 6D as well as paper number 4. In paper 6D, extra what we are going to cover is only case laws. Each case law will take 5 to 10 minutes each. So there will be totally 35-40 cases we need to discuss on in paper number 6D. Except that everything I will cover in paper number 4. So paper 4 IBC once completed, 90% of paper 6D will also get completed simultaneously. So properly revise all the concepts which are completed till now. We are now into section number 21, 24 and 28. How many sections are there? 3 sections which will be having a coverage of a very big length of sections inside, subsections inside. So this will be carrying out 4 to 5 marks in examination. I am expecting this question to come in November 2020 examination. Okay, so this is the area which can be targeted for November 2020. Chance is there this section can come, since there are some amendments that has come but not yet asked in examination. Okay, so therefore what I am doing is this particular section will be applicable and these amendments are also applicable, and I expect that this would come in examination for November 2020. So please concentrate, and what I am trying to do is whatever this lecture I am dealing now, I am going to put this also on our channel, because many people requested me personally to deal with a concept called as a committee of creditors. So whatever I am dealing in the classroom discussion, I am going to put the same video into our YouTube channel as well. So interested can visit there, or you can also revisit into the normal Google Drive classes what I am giving you. So this lecture what I am going to deal with, the section number 21, 24 and 28, I am going to put also on the YouTube channel for easy understanding of many, because many people requested me, please make a video on committee of creditors, since that is very big section. They are seeing the length of section and leaving the conceptual clarity behind. So therefore today I am going to scroll out all those issues. Section number 21, 24, 28 we will also have a viewing on the YouTube channel. So anyway, main point to discuss upon: committee of creditors, meetings of committee of creditors, approval of committee of creditors for certain actions. These are 3 sections which are linked directly to the concept called as committee of creditors. Okay, so whenever we call about the concept of committee of creditors, 3 sections are interlinked. First one, committee of creditors, meetings of committee of creditors, and approval of committee of creditors for certain actions. Here we are going to first deal with committee of creditors. Later we are going to start with the meetings of committee of creditors. Then we will be going on with the approval of committee of creditors for certain actions. So first issue, committee of creditors. Let us have a look into that. First let us read the Bare Act like what we generally do. Without reading the Bare Act, please don't start with any section. Okay, so first let us start. Committee of Creditors, section number 21. Let us read in parts, because let me first show you the length of this particular section through the Bayrak representation. So this is the content. All these things we need to read and understand now or not, that requires a lot of patience. So please listen carefully to the concept. Let us start. See here. The interim resolution professional shall, after collation of all the claims received against the corporate debtor and determination of financial position of a corporate debtor, constitute a committee of creditors. Point 1 completed. Subsection number 1. Sir, I didn't understand meaning. I am not explaining anything. I read what is there in the Bayrak. Again I read. The interim resolution professional shall, after collation, combining of all the claims received against the corporate debtor and after determination of financial position of corporate debtor, constitute a committee of creditors. Okay. Next, the committee of creditors shall comprise all financial creditors of corporate debtor. Committee of creditors shall comprise all financial creditors of corporate debtor. First, you should tell me, in our session on IBC, we completed 7 days totally. 7 days we completed 18 sections. That means hardly in every session we are covering 3 sections, because IBC is a very big chapter. It's not just a 4 marks or 10 marks chapter. It is a life in itself. Because I told you many number of times, if you want to qualify insolvency examination, you must know all the sections in detail, because you have to practically apply when you go to the insolvency spot. So therefore, anyway, financial creditor definition already explained or not? Financial creditor means a creditor to whom a financial debt is due, and includes a person who is assigning and who has got the assignment of financial debt. Financial debt means a debt which is having a consideration for time value of money. I explained the concepts or not? Definitions in detail we explained for 2 days totally. Okay. See here. Committee of creditors shall comprise all financial creditors of corporate debtor. That means committee of creditors will have only financial creditors, no operational creditors. Sir, what is the reason? Enna Pakshapatam? Why it is like that? Reason is there. We will be discussing about that much later. We are reading the Bayrak. Read it as it is without going into the intricacies inside. So the committee of creditors shall comprise all financial creditors of corporate debtor. Next, provided that a financial creditor or the authorized representative of financial creditor referred to in subsection number 6 or 6A or 5 of section 24, if it is a related party of the corporate debtor, shall not have any right of representation, participation or voting in the meeting of committee of creditors. Okay. Provided further that the first proviso shall not apply to a financial creditor regulated by financial sector regulator if it is a related party of corporate debtor solely on account of conversion or substitution of debt into equity shares or instruments convertible into equity shares, or completion of such transactions as may be prescribed prior to the insolvency commencement date. This is the first set of Bayrak representation that he has put up. One thing I want to explain very clearly in the beginning of this lecture itself. Point number 1. Don't go with an intention to have an overall coverage of sections. Okay. Don't have a wrong intention to have an overall coverage of section. I completed a section means you have to complete each and every word inside the Bayrak. Okay. That's the main intention behind. Okay. So lawmaker want to convey something. We need to understand in the same way. Consensus ad idem. We need to have that. Lawmaker want to convey in one way. You should not understand in some other way. Okay. So law has to be read with the intention of the legislature. We should not have our own interpretations inside. So therefore, with that intention, first let us read the Bayrak, and thereafter we will go for the further interpretations on this particular part. First issue. Many questions may come. Committee of creditors. Who will form committee of creditors? Who is going to form committee of creditors? First thing, see here. Interim resolution professional constitute committee of creditors. First answer completed. Interim resolution professional constitute committee of creditors. Answer completed. Sir, interim resolution professional constitute committee of creditors. When he will constitute? For that answer, after collation of all claims received against the corporate debtor and determination of financial position of corporate debtor, then he will do this constitution. That means prior to constitution of COC, first he has to make the collation of all the claims. You may ask a question, sir, what is this concept of collation of claims? Collation means a collection and totalization of all. So first issue we need to understand, what do you mean by the claims here? From the beginning of this chapter, I am shouting like anything about this word claim. Claim will be having two parts. Okay, those who are listening directly to the YouTube session, please go through this claim definition inside the BEAR Act. For those who are taking the Google Drive classes anyway, we have taken almost 50 minutes to 60 minutes, almost 1 hour time to understand the meaning of debt and claim under IBC, which is very, very important and integral part of this chapter. Unless and until you make a claim, it will not become a debt. Unless and until it is not a debt, you can't become operational debt or financial debt. Unless and until there is no financial debt and operational debt, there is no concept of financial creditor and operational creditor. Unless there is a concept of financial creditor and operational creditor, IBC, CARP cannot start. When CARP is not there, IBC is useless. So the entire IBC is running on a word called as claim. Sir, why claim? I already explained in section number 15 very clearly to you. Which section? Section number 15. On that, many case laws are also there. That we will discuss separately for paper number 6D. Okay, case laws I am discussing for paper 6D. Concepts, interpretations and basic level of cases I will be discussing in paper number 4. And this discussion confined for paper 6D as well as paper 4. Okay, so listen carefully. The interim resolution professional shall, that means it's mandatory to constitute committee of creditors. When to constitute committee of creditors? After collation of all claims. What is this claims? When I will get these claims? Section number 15, if you refer, there is a concept called as a public announcement. There is a concept called as a public announcement. Listen carefully. I will give you one example to understand. Example does not mean outside a chiller example. I am talking about the act related example, BEAR Act related example, conceptual related example. Okay, so first example to understand. Financial creditor. Okay, section number 7 read with the explanation below subsection number 1. Section 7 read with explanation below subsection number 1 says that, I am telling not the BEAR Act language for your easy understanding. If one financial creditor made an application to NCLT to initiate CIRP, okay, to initiate CIRP, protection is given not only to the financial creditors, I mean not only to the applicant financial creditor, one financial creditor applicant made a CIRP application to NCLT. Yes. Now protection and other things under IBC will be given to whom? Not only to applicant financial creditors, that means it will be given to applicant financial creditors, and it will also be given to other financial creditors of corporate debtor. Other financial creditors of corporate debtor. Okay. Other financial creditors of corporate debtor will also get a right. That means protection application must be made by one party, but protection is not just given to him, protection is given to all the other financial creditors of corporate debtor as well. This is the first issue. That means one party, if it makes an application to the NCLT to initiate CIRP under this particular act IBC, okay, then which financial creditor will be having an advantage? Every financial creditor, not just applicant. Okay, I told you very clearly when we discussed section number 7. Okay, one full session we concentrated only on understanding how that interpretation has to be made. So now listen carefully. Protection is given not only to the applicant financial creditors, but also to the other financial creditors of corporate debtor. This language is not used in section number 9 where operational creditor is referred to. That means operational creditor, if one operational creditor made an application under IBC, protection is not given to all the other operational creditors. I will give protection only to that particular party, but default is committed to all the others as well. Okay, I will give one another connected example to this. One operational creditor to whom there is rupees 2 crore due, rupees 2 crore due, made an application to NCLT, made an application to NCLT to initiate CIRP, to initiate CIRP. Now tell me, who made application? One operational creditor, name him Mr. X. Name him Mr. X. Made an application to NCLT to initiate CIRP, who has a default amount of 2 crores. Goods and services supplied, not yet paid by the corporate debtor. So 2 crores due is there. 2 crores is enough amount to make an application. This person made an application before NCLT to initiate CIRP. This is the story. Okay. This particular person, corporate debtor, is not just defaulted to him, defaulted also to another thousands of operational creditors who are having 1 lakh due, 2 lakh due, 3 lakh due, 50,000 due, like that it is there. That means what you need to understand, individually none of them can make an application because the revised threshold as per amended IBC by 24th March 2020 is 1 crore, not 1 lakh. Independently none of them can make an application because a financial creditor, listen to my words, a financial creditor can make application either independently or even jointly. That language is also not used in operational creditors. Operational creditors has no joint representation, and operational creditors also cannot have protection to other operational creditors. Okay, so listen carefully. Operational creditor made an application to NCLT to initiate CIRP, who has a default amount of 2 crores. This corporate debtor is defaulted only to this or many, but they are having amounts of 2 crores, 1 crore, less than 1 crore, less than 1 crore. So they didn't make any application before NCLT because they don't have any right to make it. Am I clear or not? Now answer my question. If this is the case of financial creditor, I would be very safe because if one person makes an application, all the others will also get protected. Okay, that concept you can't expect in the case of operational creditors. In such a case, what operational creditors has to do? They have to make their individual claim. Who has to make? Other operational creditors. Now tell me, who made application to NCLT? Who made application to NCLT? X. Made application to whom? NCLT. Against whom? Corporate debtor Y Limited. Corporate debtor Y Limited. Corporate debtor Y Limited is having only one creditor, many creditors, having 1 crore due or less than 1 crore, less than 1 crore. They independently have a right to make application? No right, no right. In such a case, only a person who is eligible to make an application having 1 crore worth dues and default can make an application. He made an application. Okay. Now tell me, if X makes an application to NCLT to incorporate CIRP on that entity, initiate CIRP on that entity, how will other operational creditors will be knowing about this? How other operational creditors will be knowing about this? Some person in New Delhi, Mr. X, made an application to NCLT to initiate CIRP means how the other creditors in Hyderabad will be knowing about that? I am having a due of 1 lakh. How I will be knowing that you made an application to NCLT? I can't dream. Therefore, lawmaker has introduced a section called as section number 15, called as a public announcement. Called as what? Public announcement. Dandora time. What I will do, if any operational creditor or financial creditor made an application to the NCLT to initiate CIRP, and if I admit the application, who admit application? NCLT. If it admits that application form, then a particular section will get attracted, that is public announcement, section number 15. As per that section, if CIRP application is admitted by NCLT, immediately moratorium will get started. What will get started? Moratorium will get started. Second one, IRP will get appointed under section number 16. IRP will be appointed under section number 16. And the third very important thing that happens is public announcement. What is public announcement? In newspapers, NCLT will make an advertisement. Okay, announcement, not advertisement, sorry. It will make an announcement. What announcement it will make? It will make an announcement saying that there is a corporate debtor called as Y Limited. This Y Limited has defaulted to one of its operational creditor, Mr. X. His dues are rupees 2 crores. He came to NCLT and made an application online. We admitted that application. Any other creditors who are also into the defaults to this particular corporate debtor, you also make your own claims such that you will be getting realization under liquidation process. That means I need to know who are having a default and who are the operational creditors or not. Therefore, other operational creditors, unless and until they make a claim, that means if you sit calm, you will not get any rights under IBC. Under IBC, react upon operational corporate debtor. If you sit calm, you will not get any realization. That means you should claim your rights. You should claim your rights. Unless and until you claim for your debts due, you can't get any realization. X in New Delhi made a complaint, means how Y in Hyderabad will be knowing about that. Therefore, NCLT will make an announcement saying that this person is under CARP. Whoever other operational creditors residing anywhere in this planet, because creditor includes even PROI as per definition of the term person. Whoever belonging to this particular operational creditors of this person, please you also make your claim. If you also are under the default, if you are a creditor, please make your claim such that I will collate all my claims and then I will form the committee of creditors. Now tell me, claims will be received or not? Yes, claims will be received from financial or operational. First time financial will be received anyway. Second one, operational creditors will also make a claim. Now I will get the claims from financial or operational or both will be received. I will collate all the claims. Okay, I will have a list of 1000 creditors. In that 1000 creditors, I have to bifurcate or not? Yes, I have to bifurcate. Bifurcate whom from whom? Financial will be separated, operation will be separated. So this will be done by insolvency resolution professional. This will be done by whom? Insolvency resolution professional. That particular person, interim resolution professional you can call. That person will take the list of all the claims received under section number 50, separate them after collation. That means collation can also be taken as a accumulation and separation. Okay, I will separate operational creditors from the financial creditors, and the separated financial creditors will be entering into the committee of creditors. That's how this language has been used in this way. So whatever I said till now, this 15-20 minutes discussion is to explain the meaning of the term collation of claims received. Okay, collation of claims is not the word used. Claims received by me. Okay, claims received means what? I will give a time limit within which you should make a claim. If you make claim within the time limit I receive, then only I will accept. Okay, against the corporate debtor and determination of financial position. Sir, what is this concept of financial position? So in this context, we need to understand the meaning of the term financial position. Okay, so the interim resolution professional, after the collation of all the claims received against the corporate debtor and after determination of financial position of corporate debtor, then he shall constitute a committee. That means committee of creditors has to be constituted after doing two activities. Activity number 1, collation of all the claims. Second one, observing the financial position. Financial position shall be observed and it shall be determined. That means we need to first understand what do we mean by the financial position. So there is a definition for that. So let's first read the definition of the term financial position from this code, how it has defined the term financial position. So let us first have a look into that. See here, this is the definition of the term financial position. What is a financial position? Financial position in relation to any person means financial information of the person as on a certain date. If you take a particular date, as on the date, whatever is the financial information that is meant by a financial position. Unclear and vague. Because first we need to understand what do we mean by a financial information. So financial position in relation to any person leave off. Financial position means in relation to any person. In our context we are reading whose financial position? Corporate debtors financial position means financial information of corporate debtor, a person. In place of that I am using the word corporate debtor as on a particular date or a certain date. So here the only one important word is financial position means financial information. Financial position means financial information. That means first we need to understand and conclude what do we mean by a financial information. So that is also defined under the code as follows. See here. Financial information in relation to a person means one or more of the following categories of information, namely, first one, records of debt of the person. Records of debt of the person. Here in our case, person means corporate debtor. Person means whom? Corporate debtor. Okay. Records of the debt of corporate debtor. Records of liabilities of the corporate debtor when that particular thing is solvent, when the person is solvent. Records of assets of corporate debtor over which a security interest has been created. Records if any of instances of default by the person against any debt. Records of balance sheet and cash flow statements of the person and such other information as may be specified. First thing, try to understand clearly one important issue here. First important work that an insolvency resolution professional or interim resolution professional has to do is collation of all the claims. Take the claims from everyone. Once after taking the claims, we need to check for insolvency. That means, what do you mean by insolvency? If the liabilities of a person as on a particular date are far in excess of the assets, that's called as insolvency. However, in one context you need to understand one very important point. A payment has to be made after 5 years. Okay, a payment has to be made after 5 years. We can know whether he is defaulted or not defaulted today or after 5 years. After 5 years. That means as on the date, if the liquidity is well, yes, he is solvent, even though he is not having a good liquidity today, because the liability is not getting today attracted, it is attracted in the near future. So therefore, one important thing we need to understand in this particular connection is always whenever we are talking about a creditor, he should be having, or a debtor, the corporate debtor should having a debt as on the date. After that, if the default happened and it is exceeding amount of rupees 1 lakh or 1 lakh or more than 1 lakh, then only CARP will start. That means the important element is, first thing, everyone make a claim. In that we will be bifurcating the financial creditors and operational creditors, and to those he defaulted, those not defaulted, separately it will be categorized. That's entirely different story. First let us try to understand the main issue. First thing, financial position means financial information of a person as on a particular date or a certain date. What is financial information? Financial information in relation to a person means one or more of the following information. First one, having taken the record of debt of a corporate debtor. Here person means our corporate debtor. That means record of debt. Next one, two things, assets, liabilities. In that first thing is a liability, second one assets. Assets also what is required? Assets which is kept as a security. Okay, assets which is kept as a security. That means mortgages will be created or not. Which assets are subjected to mortgage? Those information I need. Those are called as a secured creditors. Called as what? Secured creditors. That means have the list of all the secured creditors. Next one, record of any instances of default by the person against any debt. That means if any default is committed, take that information into consideration. Records of balance sheet and cash flow statement. Cash flow statement. Sir, why balance sheet and cash flow statement? To know whether the assets and liabilities whatever I have given are correct or not. Why cash flow statement? To check the liquidity situation of the company. That means after getting the information of your debt, after getting the information of your liabilities, after getting the information of your assets subjected to mortgages, after getting the information of default, balance sheets and cash flow statements, then you have to form a committee called as a committee of creditors, So everyone will get one small doubt. What is the doubt that they will get? Sir, committee of creditors will be formed by every financial creditor, or it will be getting attracted and committee will be formed by defaulted financial creditors. That means who got defaulted, those will form a committee of creditors, or every financial creditor will form. For example, if I give a loan to a particular person, I will be called as a financial creditor. I may get defaulted, I may not get defaulted. Now tell me whether I will be taken into this particular issue or not is a query. Committee of creditors to take them into consideration. That means who shall enter into the committee of creditors? Defaulted financial creditors. That means defaulted means they are not defaulting, they are getting defaulted. Defaulted financial creditor or any financial creditor is possible, is a very important query. Okay, if you read apparently the Bayer Act, you will get the word committee of creditors shall be formed by all financial creditors of corporate debtor. All financial creditors of a corporate debtor. So who got defaulted, only them or everyone will be taken is a query. Now that I will discuss much later. But one thing, before you form a committee of creditors, first you need to take up the financial position. That means the debt of a particular person. That's why in the section he clearly bifurcated. Debt is different, default is different. I want to know both the information. How much debt is there, in that how much default is committed, can we pay to the defaulted persons as of now, and even after payment to them, are we insolvent or are we solvent is a query. If we are solvent, CIRP stops. If you are not solvent, CIRP turns into liquidation. Answer completed. That means committee of creditors will be taken, committee of creditors will form all kinds of creditors, whether defaulted or not. Am I clear or not? Only defaulted taken, non-defaulted will not be taken. Not like that. How they will take the assets and liabilities. How much debt is there? Okay, how much debt is there? In that how much secured creditors are there? How much unsecured are there? To whom you are defaulted as on the date. Here the only point is defaulted are eligible to make application. That's all. Okay, eligible to make application. But when it comes to solvency or insolvency, I should not check only the defaulted person, I should check everyone. That means as on today, that means 180 days completed. As on today, what is the answer? Total all the assets, SRI total all the liabilities, SRI total. Okay, first pay to the liquidation cost, SRI paid. Balance available, yes. Pay to workmen, paid, yes sir. Pay to government, sorry, pay to the priority will be given, workmen will be there, secure debts will be there. Next one, employees will be there. After that, unsecured debts will be there. Pay in an order. Am I clear? Pay in order means you will not pay. If we pay, are we solvent or not is a query. Am I clear? That means first thing, take the debt of a person. Okay, take the debt of a person. Then take all the liabilities of the person, provided once upon a time he will be solvent or not at that time. Next one, assets are subjected to mortgage. Bring that information because they are called as secured creditors. Sir, why I should take this information? Very good question. Secured creditors are of two types: relinquished secured creditors and secured creditors. Secured creditors, relinquished secured creditors. Sir, what do you mean by secured creditors and relinquished secured creditors? Some secured creditors will tell that we will do one thing. We will not sell the assets and take the money. We will also go along with the normal unsecured creditors. Sell our securities also along with the bulk of all assets you are selling out. Okay, but when you are pay some amount to us in priority to all other debts. Sir, I didn't understand. You can understand this once we come to section number 53. Section number 53. There I will discuss about priority in payment of debts. The very before section 52, secured creditors powers will be available. There I will discuss. But remember, as of now, secured creditors are very, very important in this act. Sir, secured creditor means financial creditor or operational creditor, anyone. Okay. So therefore, listen carefully. Assets over which security interest has been created. Security interest has been created. Okay, next. If there are any defaults by a person, then I want that particular default information. Balance sheet and cash flows to know the real details of assets, liabilities and liquidity position of a company. By considering all these things, he will form a committee. In that committee, I will bifurcate after collation of all the claims into financial creditors, operational creditors. Financial creditors will have absolute rights. Operational creditors cannot enter into the committee. Reason I will tell you later, as I already said. Okay, so first one, everyone, don't think that I am revising too much, but you should. Okay, please answer. What do we mean by financial information? It means how many will be there. How many means any of them will be there, but tell me at least these are first 5. Any other information as well prescribed is said in the regulations, which is not applicable for exam. Firstly, records of debt, liabilities, assets over which mortgage or security interest is created, details of default committed, balance sheet and cash flow statement information. After taking all this information, after collation of all the claims, interim resolution professional shall form a committee. That committee is called as a committee of creditors. Now we completed subsection number 1 of section number 21. This is the time that we generally take to complete a very big aspects like committee of creditors. So the next point is, who shall be there inside the committee of creditors? That means who shall form this committee is the next query. Okay, first one, the committee of creditors shall comprise all financial creditors of the corporate debtor. The word used is all financial creditors. It is not defaulted financial creditors. It is all financial creditors. That means you may be defaulted, you may not be defaulted. You will be taken as a financial creditor. All these people will form a committee of a corporate debtor. Now a very good question may get arise that will be made in this way. Point number 1. Committee of creditors shall comprise of all financial creditors of corporate debtor. That's the answer. Now the query that may arise is, why operational creditors are totally debarred from forming the committee? Why they are not counted into the committee? Is there any peculiar reason for that? So the main reason why operational creditors are excluded from forming the committee is, first thing, what financial creditors will do? Financial creditors will do the commercial viability of corporate debtor to repay or not to repay shall be assessed by this particular committee. That means how much is the assets value, how much is the liabilities value. When I am talking about assets value, assets means the realizable value of the assets. Everything they will assess and they will discuss inside the committee and form a conclusion whether this company is a solvent or whether this company is insolvent. Who has to decide? Financial creditors will take all kinds of decisions. From this we need to learn one important thing. Why operational creditors are totally disregarded in counting the number of committee of creditors? The only reason is operational creditors in majority of cases they are inefficient and they are incapable to check the commercial viability of an enterprise. So just because of one single reason, Mr. X sold goods to a particular person, for example, okay, Mr. X sold goods to X Limited. X Limited got defaulted. Mr. X is a person who will sell the goods to that particular company. Okay. Second question. A particular employee is there or factory workman is there. Factory workmen. There are thousands of workmen working in the factory. A company got defaulted for 5,000 for every employee or every worker in the factory. 5,000 into 1,000 will go to 5 crores. But the limit of this default is just 1 crore. Now, if you include all the workmen into the committee of creditor, 2 problems will come. Huge number will form a committee, which is very difficult to call a meeting. And second very important disadvantage is, Workmen, if they come to the committee and sit in the committee room, if you ask them a query on check the financial viability or commercial viability of the enterprise, what they will know? If you ask about nuts and bolts, they can answer. How can they answer about the financial viability and the commercial situation of the company? So then financial creditors can do that work. A question may arise immediately. Yes, they can. Financial creditors will be banks, financial institutions and government entities. Okay, definitely they will have an expert team. They will come and sit in the committee. Am I clear or not? So one important point that you need to understand is, in order to have the people who have an access to the commercial viability, access to the financial knowledge, only those has to come and sit in the place. So therefore the committee to have two things. For example, creditors for finance, creditors for trade, creditors for finance, creditors for trade. In these two areas, number will be higher. In which case, creditors for finance or creditors for trade? Obviously creditors for trade will be higher. Now answer, is it that easy to form a committee with 1 lakh members? No chance. Therefore, sir, again, this is very important to note. In companies, you may ask a question, sir, in company, quorum will be 5 members, 15 members, 30 members, like that, sir. That is quorum for general meeting. General meeting, if you don't attend, if you attend, nothing will happen. No problem. You may miss a buffet there, that's all. But this is insolvency situation. All the creditors has to come and sit in the premises. If 1 lakh operational creditors come and sit in the premises, which area is there to cater them? So therefore, taking into consideration the volume of number and taking into consideration the nature of that creditor, government has intended or legislation has intended not to include operational creditors into the committee. Don't misunderstand that we are showing partiality towards the financial creditors. Financial creditors will form committee. That's all. They will be inside committee of creditors. That does not mean that they will work for themselves. They will represent operational creditors as well. They will talk about the concerns of operational creditors as well. They will take the problems of operational creditors as well. But committee will be formed by financial creditors. That's all. Okay. So again, one important point. The word used is all financial creditors. It need not be defaulted. That's what I told you from the meaning of the term financial information. Financial information means one or all of the following information. In that, the total debt details are given, liability details given, mortgage assets details are given, and fourth one, default details are given. That means default and other financial creditors, everyone will form committee. Defaulted has to be paid immediately, others has to be paid in a near point of time. That means they will check like this. Okay, default happened to whom? Both to financial and operational. For example, okay, financial creditor is there. Is there any security? Yes. If you sell that security, how much value you will get? I will get this much value. For operational creditors, what to do? If you pay this, okay, very good. If you pay to all other creditors as well as on this day, is the company solvent or not solvent is a query. If it is solvent, well and good. If it is insolvent, it will turn into liquidation. All this process we will see at a later point of time, not now. Up to here, I hope everyone understand it properly. So therefore, this committee shall be formed only by financial creditors and not by the operational creditors. This is one very, very important issue that everyone want to understand. Next issue. Proviso. We are going into bit by bit. Subsection number 1 completed, subsection 2 completed. Now we need to come to the proviso. Here we need to understand one thing. Amendment is also there. This is the first proviso. This is the second proviso. Okay, there are two provisos, proviso 1 and proviso 2. Sir, what is this proviso 1 and proviso 2? Let's learn first. Later we will be understanding the concept. Let us first read both. Provided that a financial creditor or the authorized representative of financial creditor referred to in subsection 6 or 6A or 5 of section 24, if it is a related party of the corporate debtor, shall not have a right of representation, participation or voting in a meeting of committee of creditors. Provided further that first proviso shall not apply to a financial creditor regulated by a financial sector regulator if it is a related party of the corporate debtor solely on account of conversion or substitution of debt into equity shares or instruments convertible into equity shares or completion of such transactions as may be prescribed prior to the insolvency commencement date. I didn't explain anything. I just read what is there in the Bare Act. Now it's your turn to read. Take a minute time. Later we will start with the discussion on this particular aspect on the provisos. Start doing it. So let's try to analyze this point first. Once this is completed, we'll be going into the second proviso. First, enough time taken to read this. Let us first start with proviso number 1. So the first proviso says like this. Simple answer is, committee of creditors will be formed in which company? Defaulted company or who got defaulted? Defaulted company or who is getting defaulted? Who will be forming? In which company we should form a committee? In the corporate debtor. Simply financial creditor, corporate debtor is there. We will be replacing the corporate debtors management and we are forming a new committee, or a new IRP will be establishing it, and as IRP will be going into the corporate debtor and he will be forming a committee called as a committee of creditors inside the corporate debtor. Query is, corporate debtor is a person who has a dues to many parties. He is a corporate debtor. Now the query is, if financial creditor is a related party to the corporate debtor, who will be called as a related party is a very important question that we will discuss at the end of this section, section number 21. As of now, please listen and remember one important issue. Operational creditor, anyway he is not forming the part of the committee. Financial creditors will form part of committee of creditors. My query that I want to raise is, if any financial creditor is a related party to the corporate debtor, he will pass resolutions inside the committee of creditors in favor to the CD or against to the CD. In favor to the CD. He will always try not to take CD into insolvency, and he will compromise with that particular CD as well. In order not to get these type of situations occur, government has taken an initiative through a section or through a proviso. If it is very much peculiar, that proviso is a first proviso to section 21 subsection number 2, which says that a related party to the corporate debtor, a related party being a financial creditor to the corporate debtor. There is a financial creditor, there is a corporate debtor. Both these parties are related parties. In such a case, that financial creditor who is a related party will not have a right to represent, right to participate, right to vote. Representation means that person can't appoint this person. Okay, right of representation means coming and sitting at the meeting, you can't do that. Participate in the discussion, not possible. Making a vote, not possible. Three things not at all possible: right to representation, right to participation, and right to vote. Right to representation is more subjectively applicable for the authorized representatives. Sir, who is this authorized representative all of a sudden? Listen carefully. Who is an authorized representative? Authorized representative means always financial creditors may be companies. Financial creditors may be companies. Company is an artificial person or a natural person? Artificial person. Therefore, companies will appoint an individual authorized representative. As an individual authorized representative, please, you go and fight for the company, or you go and represent our company. Okay, if that person is a related party to CD, then also the same provisions will apply. That means if the financial creditor or its authorized representative is a related party, related party to whom? Corporate debtor, then that financial creditor or that particular authorized representative of financial creditor shall not get any right of representation, participation, or voting in a meeting of committee of creditors. This is the first issue. However, a small exception has been given. There is a small exception to this particular point. What is that exception? This is proviso to subsection number 2. First proviso. This proviso is second proviso. This is an exception to the first proviso. Okay, let us read. Meanings I will tell you later. Let us read for the last time. Provided further that the first proviso shall not apply. That means this shall not apply. Okay, what is this? Related parties cannot represent, participate, vote. Okay, RPV, representation, participation, voting. Okay, shall not apply means what? First proviso shall not apply means they shall have right to represent, right to participate, and right to vote. When? See here. Provided further that first proviso shall not apply to whom? To a financial creditor. Which kind of financial creditor? Regulated by financial sector regulator. If it is a related party of the corporate debtor solely on account of conversion or substitution of debt into equity shares, or instruments convertible into equity shares, or completion of such transactions as may be prescribed prior to the insolvency commencement date. What this is all about. So just let us try to understand with an example. But before that, see this diagram. Whatever I said is in a representation of a diagram, flowchart format. See here. There is a company called as X Limited, corporate debtor, COC formed by FC or authorized representative of FC. This authorized representative of FC or FC is a related party to corporate debtor. Then no chance to represent, participate, and vote. If you want, you can smallly make a note. Please make a note. Take a half-minute time. Complete it fast. So let us start with the analysis. Exception was given to the first proviso, means the conditions that are to be satisfied are: first, there must be a financial creditor. There must be a financial creditor regulated by financial sector regulators like RBI. Okay, like RBI, and all these authorities are taken into the meaning of the term financial sector regulators. Financing can also be made by insurance companies, IRDAI. All these things are financial sector regulators. If it is a related party of the corporate debtor solely on account of financial conversion or substitution of debt into equity shares, or instrument convertible into equity shares, or completion of such transactions as may be prescribed prior to the insolvency commencement date. So in a easy terminology, we can understand this way. See here. RBI and BIFR, examples only. Many financial sector regulators are there. This is one example. RBI, Reserve Bank of India, BIFR, Board for Industrial and Financial Restructuring, introduced two types of schemes. RBI has introduced two schemes, strategic debt restructuring scheme or scheme of sustainable structuring of stressed assets. Not there in our syllabus, this is out of my own research. So we need to understand two things. RBI has introduced two different kinds of debt restructuring schemes. First one, strategic debt restructuring scheme and scheme of sustainable structuring of stressed assets. Okay, this is one and this is another. These two are introduced into India in order to make all these stressed assets, that means which are have becoming already bad assets, that means substandard, standard, doubtful, loss assets, these are all loss assets. Once upon a time which are loss assets, in order to restructure them, two schemes are brought out by RBI. One is the strategic debt restructuring scheme, second one is a sustainable structuring of stressed assets. These are the two different types of schemes that we can operate. Okay, BIFR has introduced a concept called as corporate debt restructuring. This is the corporate debt restructuring. These are the two types. So RBI has introduced two schemes and BIFR has introduced one scheme for corporate debt restructuring or debt restructuring in all the three cases. So what is the concept of debt restructuring? Restructuring is a concept where name itself is telling restructuring, which is destructured is again restructured back. That means bad assets converted back into value assets. Bad assets are converted into good assets is a concept of restructuring. Okay, in case of restructuring, many ideas will come. In that, one of the idea is conversion of debt into equity. Conversion of debt into equity. I will give you some reference points. Please do remember this as of now. Number one, if one company or any person acquires more than 2% of the paid up share capital of another company, both these will become related parties as per the definition. Company or a person acquires more than 2% of the capital in another company, both will be called as a related parties. Let's extend this example much further. This company, let us take this company, the first company under the reference. This is a company which is a financial creditor. This is a corporate debtor. This financial creditor, let's say this is for example State Bank of India company. This is corporate debtor X Limited, taken 100 crores loan and failed to repay back, made many attempts to restructure the debt. As a last resort, SBI tried to take over the equity of this company and become majority shareholder. Okay, therefore what happened? State Bank of India has converted the total debt due from this company into equity, and that equity has become, let's say for example, 10% of total equity of X Limited. Now answer, more than 2% itself is making a related party means SBI has on conversion acquired 10% of equity of X Limited or not? Now tell me, both SBI and X Limited are related parties or unrelated parties? Related parties. Therefore, sadly, SBI cannot represent, SBI cannot participate, SBI cannot vote, since it is a financial creditor who is a related party to the corporate debtor. This is the idea. Therefore, try to understand clearly. The main point that we need to understand is there is an exception provided to this, because SBI is not a normal financial creditor. SBI is safeguarded and protected, and they are regulated by RBI being a financial sector regulator. Therefore, exception was given to this SBI. That means my query is, and my answer for that point is, SBI, though it is a financial creditor becoming a related party to X Limited, the point one need to understand is, okay, financial creditor who is regulated by a financial sector regulator who becomes a related party just because of, okay, just because of conversion of, just because of conversion of debt into equity, such kind of financial creditors are excluded. That means they can have a right to represent, right to participate, right to vote. Now one small question to understand this issue. The point is, SBI is a normal person or a financial sector regulator, regulated authority, financial sector regulated particular person or a bank or etc. That means this can be invoking the exception or not? Yes, it can be invoking the exception provided under this particular section. The main point one need to understand in this connection is, SBI is also debarred from representing, debarred from participating, debarred from voting if the conversion is not the reason for becoming a related party. That means already SBI is holding 7% capital in corporate debtor, not because of conversion. Even previously it invested in the shares of corporate debtor in X Limited. Okay, it already has 7% capital, not because of conversion of equity. Okay, not because of conversion of debt into equity, because of some other reason. Okay, directly made an acquisition. Now tell me, 7% becomes a related party or not? Yes. Now you should not tell that SB is a financial creditor who is regulated by financial sector regulator, therefore SB is excluded from first proviso. Because of that reason SB will get the right to represent, participate and vote. You can't tell like that, because that status of related party is acquired not out of conversion of debt into equity during debt restructuring schemes. It is by normal acquisition. SBI will not get any kind of chance. It can also be debarred from representation, participation and voting if conversion is not the reason for becoming a related party. This is the meaning of the term solely. Okay, he is using the word solely on account of. That means only because of reason of conversion of debt into equity should result in your related party status, not because of any other reason. Clear? So this is another point that I want to stress on. So next subsection number 3, subject to the subsections 6 and 6a. That means something is said in subsection 6 and 6a, following that this has to be read with. Okay, let us read. Subject to subsection 6 and 6a, where corporate debtor owes financial debts to two or more financial creditors as a part of consortium or agreement, each such financial creditor shall be a part of committee of creditors, and their voting share shall be determined on the basis of financial debts owed to them. Sir, what is this language all about? First take a minute time, read the content carefully. Okay, so let us start. Sir, what is the concept of this particular subsection number 3? Okay, let's have a look into the concept first. See here, financial creditor 1, creditor 3. Three types of financial creditors are there: FC1, FC2 and FC3. Three particular persons, let's say these are banks, bank number 1, 2 and 3. Let's name them PNB, SBI, Canara Bank. Three banks are there. All these three banks as a part of agreement. That means as a part of a consortium. They have given loan to one particular person, let us say three persons has given loan to one common party, let's say there is a company, Nirav Modi Frauds India Limited. Okay, a very big company is a big fraud company, Nirav Modi Fraud India Limited. A very good company is there. To that company, all these three banks as a consortium, they have lent money to whom? NMF India Limited. Sir, why they have to do like that? He would have taken loan from independently from all the banks. The problem is Mr. Nirav Modi will first approach Punjab National Bank. He will ask an amount of 7,000 crores loan. Immediately the bank manager will get paralysis. He will fall down. 7,000 crores means who will give the loan for single company? Credit limits will be there for each and every bank to be sanctioned to a single party. Bank manager will get fits if you ask 9,000 crores for a single party. Therefore, what PNB will do? But we can't lose a customer. Immediately a bank will tell, sir, please wait, have a cup of coffee. Okay, wait, I will talk with associate banks. Okay, I will talk with associate banks. Punjab National Bank will now go to SBI and it will tell, there is a great person, living legend, Nirav Modi. If you give loan to that particular person, you will not forget that person. Yes, really we are not forgetting him. So, if you give loan to this particular party, Nirav Modi, never you will forget that in your life. This occasion will be remembered forever. Okay, SBI really didn't understand what is the literal meaning of those terms. So the point is, SBI was consulted by PNB. They said, there is a very good customer, my credit limit, that means PNB is possible to give only 3,500 crores out of total 7,000 crores. SBI said that, okay, oh, no problem, I will sanction 2,000 crores. Okay, 2,000 crores I will sanction. Canara Bank said that, okay, no problem, I will sanction another 2,000 crores. Okay, 4,000 and mine 3,500, 7,500 crores. Lelo, take the loan. 7,500 crores loan was given to NMF India Limited. Let us take for example. Now answer my question clearly. Loan is sanctioned by one bank or two banks or three banks. Okay, three banks independently or three banks in an agreement and consortium. It's called as a consortium financing. It is also called as a syndicate facility. It is also called as a syndicate lending. Okay, this is forming part of a syndicate group. All these three banks are forming a group and giving a loan. Very good. Loan given. NMF got defaulted. Now, these three persons will be financial creditors or not? Yes. NMF immediately takes the status of corporate debtor. Once NMF India Limited becomes a corporate debtor, what you need to understand from this, financial creditor is getting indebted to financial creditor has a amount to get back from the corporate debtor being NMF India Limited. Yes or no? Now in such a case, corporate debtor will be forming a committee of creditor. Loan given by PNB or SBI or Canara Bank or all of them put together. Okay. Now the point is, committee of creditors will contain whom? Financial creditors. Question arises, which financial creditor? If independently given, PNB is FC1, SBI will be FC2 and Canara Bank will be FC3. Now the loan is given independently or loan is given collectively as a syndicate, Now who shall have the status of committee of creditors, a financial creditor? Lead banker will be PNB. SBI and Canara Bank are subordinate syndicates. Now answer, this particular committee of creditors must be filled by FC being PNB or SBI or Canara Bank is a query. To answer this query, subsection 3 has been inserted, saying that each of them will have their representation. So then how the voting will be done? According to the percentage of debt they have given. according to the percentage of debt. Sir, how to calculate? That's not applicable for examinations for paper 4. Paper 6D it is applicable. A small calculation will be there that we will be doing in paper number 6D. As of now, remember there is a calculation. What calculation? Voting share calculation. Voting share. Share does not mean share capital. Share means party, the particular what to say, that part of debt is called as a share. It's not equity share or share. This is a part of ownership is called as a share here. My share means what? My part of ownership, like that. In the debt, total debt of 7,500, what is my portion? On that basis they will calculate voting rights. That is not discussed here, that will be discussed in paper 60 very clearly. So the point what we have to understand in this connection is, whenever a syndicate lending is made, or whenever a cluster financing or consortium lending is made, who shall be considered as an FC for the purposes of COC? Each of them shall be considered. Everyone understood or not? And these are subjected to normal provisions. If this SBI is, or if this Canara Bank is already a related party to this, then it will not be representing, it will not be participating, it will not be voting. That's an entirely different story. Okay, so this is the point that we need to understand. This is all about subsection number 3. So let's go back to subsection number 3. See here, subject to subsections 6 and 6A. What is 6 and 6A? We didn't complete that. When we complete, we can understand. Where corporate debtor owes financial debts to 2 or more financial creditors, here 3 banks, as a consortium or agreement. Consortium, each such financial, here the important word is each such financial creditor shall be the part of committee of creditors, and their voting share shall be determined on the basis of financial debts owed to them. That's a calculation we need not understand as of now. So now we completed another subsection. Subsection number 3 is also completed. Now we are jumping into next subsection, subsection number 4. Now subsection number 4 will be talking about dual capacity. What is the concept? Dual capacity. Before you read the BERAC, first let me give you and visualize certain situations that can happen in a real life scenario. Later you can read subsection number 4. 3 completed, 4 we are coming into. In subsection 4 there are 2 clauses again. 21 subsection 4, clause A and clause B. Okay, shall we start with the point? So let us make it. So the next issue, the next concept that we are going to learn is, so there is a company X Limited. X Limited supplied goods and services worth 10 crores to Y Limited, and X Limited gave a loan of 50 crores to Y Limited. 2 things have done. Now, in capacity of supplying goods, X Limited is a operational creditor. In capacity as giving a loan, it is taking the charge of financial creditor. Now the query is, corporate debtor has committed a default. Corporate debtor has committed a default. Now into the committee of creditors they have to go or not? Into committee of creditors, who will be allowed? Financial creditor or operational creditor? Financial creditor. Now tell me, X Limited is a financial creditor or operational creditor? Both financial as well as operational creditor. If you call X Limited as a financial creditor, allowed to enter COC. If you call him as an operational creditor, not allowed to enter into COC. Now tell me, in which capacity you will take? Highest or lowest? Highest or lowest? What you will take? No such concept. What the law is telling is, in capacity as a financial creditor, 50 crores debt will be taken. On this value, voting share will be given. Though he is totally indebted to, though he is totally owed by the company to the tune of 60 crores, voting will not be given on the basis of 60 crores voting rights. I will give the voting only to the extent of 50 crores. Only to the extent of 50 crores. That means, if a person is taking a dual capacity, both as a financial creditor and also as an operational creditor, we will be taking him only in one capacity, and that will be financial creditor. Technically, in one word, your status of operational creditor shall be ignored while calculating for COC. Answer completed. So please have a reading. First write down this, take a while, make it complete, and then we will be going into the next subsection, subsection number 5. So the next one, subsection number 5, where an operational creditor has assigned or legally transferred any operational debt to a financial creditor, the assignee or transferee shall be considered as an operational creditor to the extent of such assignment or legal transfer. So what does it mean? First, let us take a minute time and read that first. Where an operational creditor has assigned or legally transferred any operational debt to a financial creditor, the assignee or transferee shall be considered as an operational creditor to the extent of such assignment or transfer. Simple only, not so complicated like the previous one. So first let us try to understand clearly. The concept is assignment of debt. So what is the concept of assignment of debt? That means, let's take three parties: X Limited, Y Limited, Z Limited. X Limited has given loan to Z Limited. Let's say rupees 1 crore. Next, X Limited gave a loan to Y Limited. Loan of rupees 1 crore given. Next one, Z Limited is there. Z Limited the situation runs like this. So see here, X Limited has given loan of 1 crore to Y Limited, and X Limited, okay, arrow mark let me change. X Limited has supplied goods or services. Let's take one thing, goods worth rupees 1 crore. For simplicity sake, I am taking 1 crore in all the cases. Amount may change. So X Limited has given loan of 1 crore to Y Limited. X Limited has supplied goods worth 1 crore to Z Limited. Okay. Next, Z Limited has supplied goods of rupees 1 crore to Y Limited. Now tell me the status of each and every party in this transaction. What is the status? First, X Limited in relation to Y Limited. X Limited in relation to Y Limited. This will be a financial creditor. X Limited in relation to Z Limited. Is a operational creditor. Next, Z Limited in relation to Y Limited. Z Limited in relation to Y Limited is having a capacity of operational creditor. Due date came. Due date came. First, listen carefully. X Limited gave loan of 1 crore to Y Limited, taking the position of financial creditor. X Limited supplied goods to Z Limited worth 1 crore, taking the position of an operational creditor. Z Limited supplied goods to Y Limited, taking the position of an operational creditor. Z Limited has to pay back to X Limited or not? At that time, instead of making you the payment and getting payment from this party, I will do one thing. They have made a stamp, they have taken a stamp paper, executed a deed, transfer or assignment deeds will be available. What they have done is, Z Limited assigned its, Z Limited has assigned its operational debt of 1 crore in favor of Z Limited, has assigned its operational debt due from Y Limited to X Limited, What happens because of this net effect? Listen carefully. X Limited has to receive 1 crore, Z Limited has to receive 1 crore. Z Limited, what it will do? It will transfer this 1 crore to to the X Limited. That means what we need to understand in this connection, the point is, try to understand here. The point is, this 1 crore rupee actually it should be collected from Y Limited or not? Yes, collected from Y Limited. It will not collect from Y Limited and pay to X Limited. It will transfer this 1 crore rupee in favor of X Limited. That means the operational debt due from Y Limited to Z Limited now becomes due from Y Limited to X Limited. Y Limited to X Limited. Because of this effect of assignment, this operational debt will be cancelled and a new operational debt will be created in favor of this particular company called as Y Limited. That means for Y Limited, I am taking two positions now. First one as a financial creditor, second one as an operational creditor. That means I will be handling one position or two positions. Two positions I am holding. In such case, what to do is a query that is answered by subsection 5. If that be the case, I am taking the position of financial creditor and operational creditor of Y Limited. I will have my rights only in capacity as a financial creditor. No rights will be given in capacity as a operational creditor upon such assignment. Answer completed. So please check out subsection number 5. Complete subsection number 5. So where an operational creditor has assigned or legally transferred any operational debt to a financial creditor, the assignee or transferee shall be considered as an operational creditor to the extent of such assignment or legal transfer. That means the financial creditor shall be considered as an operational creditor to the extent of such assignment. That means financial creditor, if he get the assignment of operational debt, that will not become a financial debt, that becomes only operational debt. To that extent you will be called as a operational creditor only. So this is another point that we completed. Now we completed subsection 1 or 2 or 3 or 4 or 5. Subsection number 5 is completed now. So this is one part of this particular section number 21. So now we are entering into the main subsection of this particular section number 21, subsection number 6 of section number 21 of IBC. What is this subsection number 6? Very important and very difficult to understand. So please have some concentration. This is subsection 6. Subsection 6 capital A. In this again subparts are there: A, B, C, capital B, okay, capital B. In this two parts are there. So these are the things that we are going to learn. In first subsection there are 4 parts. So these many parts we are going to read now. Very important and very difficult. I am warning you before we start. So please be here, listen to the concepts carefully. Let us go very slow and complete this aspect called as committee of creditors, a big section in our syllabus. After this another biggest section is there. Section number 29A is another one big section that we need to cover up. Section number 29A. Once section number 29A is completed, remaining sections are, some are small, some are big, moderately small and big, like that it will be continuing. Later, distribution of assets, liquidation estate, those sections are fairly lengthy and remaining are very small to complete off. Okay, so let's try to understand the concept of subsection number 6. Listen, where the terms of financial debt extended as a part of consortium agreement or syndicated facility provide for single trustee or agent to act for all financial creditors. Each financial creditor may authorize the trustee or an agent to act on his behalf in the committee of creditors to the extent of his voting share, represent himself in the committee of creditors to the extent of his voting share, appoint insolvency professional other than resolution professional at his own cost to represent himself in the committee of creditors to the extent of his voting share, exercise his right to vote to the extent of his voting share with one or more financial creditors jointly or severally. This is subsection number 6. First, make your attempt, complete this particular discussion first, complete from here to here. Later we will be going into understanding of this particular area. So first read this part of the story. Don't waste time, read it properly. I am giving you 2 minutes halt for understanding this. Later if you don't understand, pause the video and listen. But as taking a responsibility to make you understand, so I am giving you exactly 1.5 to 2 minutes time for you to understand this. Read this. Sir, I didn't understand in 1.5 minute or 2 minutes the time given. So please pause the video and at least look at that. Okay, so please start reading. So let us continue with this particular subsection, subsection number 6, where the terms of financial debt extended as a part of consortium agreement or syndicated facility provide for a single trustee or an agent to act for all financial creditors. Each financial creditor may authorize the trustee or agent to act on his behalf of the corporate in the committee of creditors to the extent of his voting share, represent himself in the committee, appoint IP not being RP to represent, exercise the right of vote and extent of the voting share. Sir, what is all these things going on? Listen carefully. Sometimes, first thing, we need to understand one very important issue, where terms of financial debt extended as a part of consortium or agreement provide for a single trustee or agent. That means this subsection number 6, is applicable only if consortium agreement will be entered between 3-4 banks or not. At that time, the 3-4 banks have agreed. What agreement they have entered into? They agreed to appoint a single trustee or single agent on behalf of all of them. SBI, okay, or PNB, SBI, Canara Bank. All these three has appointed a single trustee. That single trustee, sir, here the beauty of the law is committee of creditors will be filled with whom? Financial creditors. Yes or no? Now, this is an exception to that. Here, a person who is not a financial creditor can enter into the premises. That means the meeting may be attended by a person who is not a financial creditor but who is a agreed trustee or agreed agent. That means SBI, PNB, and another bank being Canara Bank, all the three banks will enter into an agreement at the time of sanctioning the loan itself, saying that our loan is subjected to appointment of a single trustee or a single agent. This single agent will be present at all the meetings of corporate debtor. Okay, now listen carefully. I will be appointing one trustee or multiple trustees. Single trustee or agent, it can only single one person will be appointed to represent whom? One bank, all the banks are all the banks. Now listen carefully to the concept. That means one single trustee will be appointed to represent all of them. This is the idea behind this particular section. Okay, one important point. Now that one trustee will go and vote on SBI, PNB, or Canara Bank, or all of them put together one vote, or everyone having single vote. That means I will vote on behalf of PNB, SBI, or Canara Bank, or all of them. First one is all of them. All of them means all of them cumulatively will have one vote, or everyone will have each and every vote. Everyone will have their own representation to the extent of their voting share. Therefore, first thing is they can authorize. See here, each, to be very clear, see the word, each financial creditor may, this is optional only, authorize trustee or agent to act on his behalf in the committee of creditors to the extent of his voting share. Okay, that's the first point. So from here we need to understand one very important point. That means whenever the syndicated facility was given, the whole syndicate may agree to have a single trustee or a single agent to act on all of them on all behalf. However, then you may get it out. Sir, all behalf means if there are 5 banks, all the 5 banks should vote either in favor or vote against. No, everyone inside that can have their own idea to be executed. That means everyone can give instructions to this authorized agent or trustee. Every person can give their own instructions on how to vote and how not to vote. Okay, so listen carefully. What they can do, they have 4 chances. How many? 4 chances. Sir, for example, there are 5 banks inside. How many? 5 banks. 5 banks are appointing one single trustee to go. But one of the bank inside being SBI don't like this trustee. They don't want to get represented through this particular person. Sir, one doubt everyone will get, sir, why sir this concept came? Two reasons are there. One, banks and every other person are artificial persons, need to be represented through a natural person. Okay, natural person. That person we call him as a authorized representative. Authorized representative. That authorized representative whom we appoint can go. That authorized representative singly we have read previously. That means one financial creditor represented by another one person who will be authorizedly representing him. This is a group. This is a consortium. In consortium as well, authorized representative will be appointed who shall be a single trustee or a agent. This person will go to the meeting and represent on their behalf. Two reasons are there. First reason for that, since they are artificial persons, they will appoint a natural person as a single trustee to go. Second reason is expertise in speaking, expertise in representing. Okay, expertise in representing. What is expertise in representing here? So simple aspect we need to understand is, whenever we need to go to a meeting and speak at the meeting, first we need to have a knowledge on insolvency resolution and the law called as the Insolvency Bankruptcy Code 2016. There is no guarantee always that this single trustee or agent will have a full-fledged knowledge on IBC 16. Therefore, some banks or some financial creditors inside the consortium may feel that this single trustee business we don't need, we will have our own representation. That means agreement provided for a single trustee. Can we deviate out of that and can we appoint our own trustee? Chance is there? Yes, the law is telling C point. Insolvency professionals are those who completed the course or not. Appoint that person. Sir, my resolution professional or interim resolution professional is also a IP. Can they be becoming the authorized trustee for me or authorized representative? No chance. That means appoint insolvency professional other than resolution professional. Appoint insolvency professional other than resolution professional at his own cost to represent himself in the committee of creditors to the extent of his voting share. Here the main important points are, you can represent through insolvency professional. That person should not be a resolution professional already, and the cost of that party etc. you have to bear, own cost. Okay, own cost you have to bear it. Okay, first point, represent himself. First one is representation. First one, authorize to act. Authorize to act means to participate etc. Second one, to represent himself in the committee of creditors. And the third one is appoint an insolvency professional other than RP at his own cost, not just attending, exercise the right to vote. To the extent of the voting share, exercise even a right to vote. This is what he want to convey in subsection number 6. So the final conclusion to this subsection number 6 will be, where the terms of financial debt extended as a part of consortium. That means if the financial debt is extended in the form of a consortium or as a syndicated facility, okay, which provided for appointment of a single trustee, then that single trustee will represent all financial creditors, act on their behalf, represent on their behalf. That individual person may appoint, okay, that individual person may appoint at their own cost another insolvency professional, and lastly they can also exercise the right to vote. 4 powers are available to him. Okay, so this is the end of subsection number 6. So subsection number 6 completed. 6A and other parts will be completed in second part of this video. That means this 1 hour 40-minute session will be covering out the concept of financial creditors forming part of a consortium, okay, and appointment of a single trustee. One part of committee of creditors completed. Second part of committee of creditors is still pending, that we will be completing in the second video, part number 2, such that it will be comfortable to divide that into 2 parts of videos of 1 hour 30 minutes each. Thank you.